Man, you didn't even record my intro. That was a great intro, Phil.
I completely forgot. I was like so enthralled by the amazing intro that I was like, oops. So my bad. My
So for
bad.
those of you listening to this recording, call Phil or myself for the intro to hear it once again.
Something about 401ks adding to annuities into 401ks. It was amazing.
Annuities are
Maybe you should be
popular.
on this call. Maybe you should be on this call and then you wouldn't have to worry about it. Oh, snap. So all
Drop
right,
the mic. Drop drop the mic
carry on.
on
Carry on,
everyone,
sir.
Phil. But basically, what we're saying, the word annuities is center stage in Washington, D.C., with our lawmakers and the investment community. It's up to us to bring this message to the public and educate them on the powers of an annuity and what it could do for their retirement situation. But what it could do for you right now through National Life Group, just so you are aware of this, we actually have an annuity bonus going on right now. So this is going to pay you more on the commission side, depending on how much money you transfer over to the National Life Group on a quarterly basis. So technically, the third quarter is about to end at the end of September, but we are scheduled to continue this into the fourth quarter. And so many carriers do an annual bonus. What we did is we decided to make it into a quarterly bonus. So we actually have agents who qualify for a bonus 4 times with National Life Group. And so it's minimum of $500,000 gets you an extra 50 basis points of a commission. Just to give you an idea, we are paying out multi-million dollars of commissions just through this bonus, not even just what you as the agent get paid through the grid and your contract level, but this is at the agent level for your production in the quarter. So you can go anywhere from an extra $2,500, right, all the way up to an extra 1.25% for over $2.5 million of business. So these numbers add up quite a bit. Take advantage of this for now and through the month of September, and then you restart at the end of September to go into October, November, and December business. So if you don't qualify today, it's totally okay. You will be able to qualify for next quarter with that bonus. So it is uncapped. We have agents who've done $10 million with us in a quarter. And it's, multiply it. 10 million times 1.25%. That's extra comp that gets paid out to them. So this is a real thing that's live. Take advantage of it. All right. Take advantage of this bonus. Take advantage of the next quarter's bonus. Take advantage of this next product that I'm about to roll out and introduce to you. Because this has been our top seller. Have you guys anybody heard of the phrase multi-year guaranteed annuity? MIGA, which is basically a fixed annuity, right? An X% that this customer is going to earn. It's not an index product, but it is a fixed product. And we have annuities for all different purposes of people's stages in life. Basically, I got ahead of myself. Sorry, the MIGA product is the next slide. But what I tell people, you got to ask the questions, right? Just because somebody has $10,000, $50,000, $100,000 in either the bank or in their 401k or an IRA in a brokerage account, doesn't mean that the annuity may be the right thing for them. You have to be able to know what they're in it for, right? Are they saving this money for retirement? Are they old enough that they're already starting to plan for retirement, right? People in their 50s, early 60s, are they starting in retirement? Are they already in their 60s or in their 70s? Or if they far into their 70s and they need a peace of mind so their assets don't lose any value in the stock market, because as we see in the industry and at National Life Group, as they get older, right, 55 and up, the appetite for risk is less and less. So the annuity is a perfect position, and I'll position each one of our products into one of these categories. But our Retire Max Secure product, right? It's what it's called. It's referred to as a multi-year guaranteed annuity. And we have an option for 3 and 5 years. So meaning you put in a lump sum of money into this product, And for 3 years, you're guaranteed an interest rate, or for 5 years, you're guaranteed an interest rate. If you think this sounds like a CD, you're absolutely spot on. One of the best perks, though, is that this multi-year annuity, the client doesn't get a 1099 like they would in a CD at the end of every year, right? It's all tax deferred because it's an annuity. And so this product is flying off the shelves in National Life Group and in the industry over the last year and a half, almost, yeah, it'll be 2 years in October. If you remember what happened 2 years ago, the Federal Reserve Bank started to increase interest rates in this country because of inflation, right? If you borrowed money for a car, a home, a line of credit, anything from a bank in the last 2 years, you're paying interest rates through the roof. The highest interest rates we've seen in over the last 10, 15 years. That's bad for the borrower. That's the consumer that's a borrower, but it's great for the consumer who's looking to save in an annuity. Why? When we had this product before the Federal Reserve Bank raised interest rates, we were giving customers 1.5% for 5 years. Guess what? Nobody wanted that. Why would you when the stock market's through the roof and you have index annuities with caps of 4%, 5%, 3%? Why would you get into that? Why would you limit yourself to 1.5? You have to be very, very conservative to even look at that. Well, guess what? When we rolled this product out 2 years ago, we were giving a guaranteed 5.7% for 5 years. Now it's changed throughout the last 2 years, but what we're doing right now is on a 5-year basis, we can go up to 5.2% for transfers over $100,000. If you're looking at below, which our minimum is 25,000, it's 4.9%. If you want a 3-year contract, right? So after the 3 years, the surrender period is up. And after 5 years, the surrender period is up. So after 3 or 5 years, you have to move the money. You're not going to want to keep that product because the minimum is going to be less than what it is today. We're going to offer up to 5.1 or 4.9. So take advantage of this, guys. I'm telling you this right now. The Federal Reserve Bank is scheduled to they're scheduled to meet September 17th through the 19th, which is next week. There's a very, very, very high chance that they're going to lower interest rates because inflation's under control. The economy is getting a little rocky. Well, guess what? Once they announce the lowering of interest rates, in 2 weeks, the industry is going to start to lower interest rates on these types of products. This is the highest we are going to see them for the next year. Take advantage, and all you need to do is fill out the application today. And you have 60 days to submit the money from when you submit the application. So for 60 days, we could hold this strong rate. I don't know when's the next time in our careers we're going to be able to see these awesome interest rates on these types of products. Take advantage of them. Talk to your customers about locking in 5%, 5.2%, 4.9% for the next 3 or 5 years. Because there's very, very few assets. I'm willing to make the argument that real estate's not going to guarantee you that percentage on your dollars over the next 3 or 5 years, right? It's going to be changing. A lot of things are going to be changing. Take advantage of this while it's still available to you. Do you know who sold the most of this product in the industry over the last 12 months? It wasn't independent agents like us. It wasn't agents and advisors at wirehouses or broker dealers. It was advisors at banks and personal bankers at banks, because the banks couldn't even compete with these rates, right? If the banks aren't putting their clients in CDs, but they're putting them in these types of products, don't you think that's something that you may want to look into? That got my attention. So any question over this product, because we're missing a golden opportunity if you don't start talking to people about money, but the money that they have in savings, even if they don't want to use it for retirement in 5 years, guess what? They can take it back. They can put in whatever they want. This product expires in 3 or 5 years, depending on which option you choose. take advantage of this, because never in your career I'm willing to bet, even if you've been in a business for 20 years, actually, the last time we saw these rates was '08, right before the market tanked and interest rates went to zero. Take advantage of this. I hate to sound like a broken record, but it's very, very popular, and it could be another 10 years plus till we see these rates. And you got the bonus that it pays you more. So it's naive not to look at these. So the next product is the income driver product that I want to share. And this is strong for those clients that want to take an income in the first 5 years. The most of the customers that we see in this strategy, in this product, are at the age of 60 or older, right? So this is somebody who's retired, who is or on the verge of retiring, and they want to take an income guaranteed for life from this account in the next 5 years. And the reason why people like it so much is because you probably heard of an income rider on this annuity. Most of them come with fees. We actually have two flavors, one with a fee of 1%, the one without a fee. And it's a way for clients to get a guaranteed income without having to pay for it, and be able to say that you have access to the balance of the account without annuitizing. So a lot of the industry has gravitated to this no charge income, GLEAR, guaranteed lifetime income rider. So if you have that customer that's even, I would say between 57 and 65 is a sweet spot for this, who has saved up money in a 401k, who has saved up money in an IRA, even in a bank account or brokerage account, and they tell you, hey, I want to use this money in retirement. What can I get from it? You can tell them, hey, let's put it into this account, either the 7-year or 10-year version, and I can tell you what it'll pay out in a year, in 5 years, in 3 years, whatever the case may be. We can run the quote for you and get you those numbers.
Marco,
Good.
yeah,
Go
I was
ahead.
just saying there's a question in the chat.
Yeah, good question. I actually just had this scenario come up in the last 2 weeks, so that's how I know I'm going to give you right answers. Can someone who's moved from Germany to Texas and has the green card roll over the previous 401k from the previous job in Germany? I actually dealt with this in my career. I've dealt with this a number of times, but most recently I dealt with this from a client who has retirement dollars in the UK. So it's actually not even called a 401k. It's outside of the United States, because that's our tax code for an employer plan, for an employer retirement plan. So it's probably called something else, but it's a retirement plan that they have with their company in Germany. You can't roll over money from a different country to the United States and keep it qualified. You have to pay the taxes in that country, and then roll it and then bring it into the United States, into the United States bank account, and it'll be considered non-qualified. So they're going to have to pay taxes in that country to whatever they need, however they do it over there. I'm not an expert in taxes outside of the United States. And then they're going to have to bring it here into a U.S. bank account, and then the U.S. bank account is going to have to fund the annuity at National Life Group. So I hope that made sense. It's not clean going from a different country to here. Unfortunately, there's all these different laws that we have to follow. Money laundering is another angle, or another layer in this that we have to follow. So unfortunately, and I learned that not even in Puerto Rico is it that clean. You can't even take money from Puerto Rico and bring it here. They have to pay taxes in Puerto Rico and then bring it here. So it's a very strange thing, but it can be done. It would just be a non-qualified type of account. But this is our most popular index annuity. This annuity is not it's not a MIGA that I just shared with you. It's an index annuity, right? So for most clients that are retiring, they want to guarantee an income from their retirement account, right? Whether it's all of their retirement accounts or some of it. Sometimes it's half of it. Sometimes it's 20%, depending on the size. Let me show you just an example, right? We have a 55-year-old putting $300,000 into this account, and they start the income at 65. They would get $42,000 a year guaranteed for the rest of their lives using the standard charge income rider. But if they go to the no charge income rider, they're getting about $34,000. Now, here's what I would say. I get the question a lot. Which one is better, the charge clear or the no charge clear? I say it depends. If you have the customer who is okay with paying a 1% fee on their account for the rest of their lives, then use the standard clear. Because they're going to get more, right? Look, do the math. That's $4,000 a year more. Now, people, you have, and especially for those of you that have been in the business for long enough, you know this. You meet with the client today, you say to them, hey, Phil, I'm going to get you 42,000 versus 34,000. Which one sounds better to you? Which one do you want to go with? Oh, Marco, I want to do 42,000. Okay, thanks, Phil. That's the option we're going to go with. By the way, this is a 1% fee. They may not even realize what you just said. And we all know this, clients listen to what they want to listen to, and in a year they forget everything. Actually, not even a year, 3 months later, they forget everything. But when they get that first statement and they see a fee for $3,000, it's a real thing. When they get it for the second and third year, then they can start complaining. What I tell people is if you don't know this client very well, or you don't know what they're going to do in a couple of years, just do the no charge clear, remove the headaches from your life. You don't need them. They don't need those headaches. Life has enough headaches. I see a lot of no charge clear, even if it's giving them less income, just to get you away from the headache, because clients are going to want to listen to what they want to listen to. And so we see more no charge income than we do for the charge income. So keep that in mind. That's our top index annuity. We also have annuities for younger clients who may be looking at accumulation, right? They're not 55, they're not 60, or maybe they are, but they don't want to take an income from this, right? This is a portion of their money that they want to grow a safe way without any risk of loss. We have a 7 and a 10-year version of the growth driver. The 7-year version gives you a 7% bonus up front. The 10-year version gives you a 10% bonus on your money right away. So do the math. $100,000 transfer plus 7% is $7,000. They have $107,000 day one. So this one's very straightforward, no bells and whistles. You get a bonus up front. You get a cap to earn interest every year. After 7 years, you're free to move the money. After 10 years, you're free to move the money. It's straightforward, but this is perfect for that customer who wants to save money, grow their money, and save it from any market loss. This is the one to go to for that customer. All right. And Fit Secure Growth is our next product that I want to end with, because what's very unique, right? I actually this product and the one before is an index annuity. There's about 70 companies in the industry that have an index annuity, believe it or not, right? I mean, Phil was saying saying that earlier. I mean, you can flip a coin and land on in a product with the good carrier, right? So it's very, very difficult to stand out. But there's only maybe 3, maybe 4, I would say less than 5 companies that have an index annuity where you can make monthly or annual contributions. Like, these take transfers. The minimum is $25,000 to start them off. This one, the minimum is $100 a month, right? And where we see this product used in the marketplace is for those customers who want to have a Roth IRA. The phrase Roth IRA has been more popular than ever since the pandemic, right? I think in our business, if someone can qualify for life insurance, I would probably position the IUL first for tax-free income, because you get the living benefits and you get the death benefit. But what if you have that person who just says, look, I hate the fees of this IUL. The fees are outrageous, and you just can't get them to look past that. I tell people, well, let's cover yourself for the term and get that coverage for your family and the living benefits. But what are you going to tell them? Go here's here's a link to TD Ameritrade to you. Why would you do that? You can help them with that side of the business too. You can tell them you can max out your Roth IRA with this Fit Secure Growth, right? You can take ongoing contributions on an annual or monthly basis into this product, and you get paid every time the customer makes a deposit. We have clients that have had their IRAs open with us for 30 years. And guess what? That agent is still getting paid on that contribution from 30 years ago, or from the contributions they're making today, right? 30 years after opening up the account. So this continues to pay you for the life of the policy. Another angle we see this account is in the small business world. What if you have a business owner that wants to have a retirement account, that wants to have for themselves or for their employees? You can open this as a simple or SEP IRA and make the contributions on a monthly or annual basis for them and all their employees, right? It's like another version of the 401k. You can have that with this product. My dad has, we just launched this product maybe like 3-4 years ago, but 10 years ago, I opened up my dad a SEP IRA. He's a truck driver with one employee, my mother. And so he's a LLC, S Corp type of thing set up. So he's a business. So he maxes out or tries to as much as possible his own SEP IRA. It's with National Life Group. He's been funding it for 7-8 years now. And he gets a tax deduction for anything he puts into his account, into my mom's account. Because it's a SEP IRA, it's a plan that he's making a contribution to a retirement account. Guess what? As a business, you get a deduction. So, and by the way, let me tell you, people don't know about those accounts, right? Actually, guys, on this call, guess what we all are? A sole proprietor, or if you have a corporation as an LLC, you yourself are a business in the eyes of the IRS. You can set up your own SEP or simple IRA for you and your business, and you get a deduction on that. So, you just have you are your own, can be your own customer for this. So,
say
man,
that again, Marco. Can you say that again? There should be 22 sales coming your way, right? Say that again.
you absolutely can sign up, all right, for your own SEP IRA, because everyone on this call is an independent contractor. You are your own business in the eyes of the IRS. And just like my dad, he has he started off as a sole proprietor. He's an LLC. I signed up a SEP IRA for him. Everyone on this call, the 22 people, you can have your own SEP IRA, SEP IRA. I'll make sure we send out information on that, Phil. We have some great stuff on it. You guys can set up your own. You can fund it monthly, annually. If it's you just by yourself, you don't have any employees, you can choose not to fund it, right? You don't have to fund it if you want to skip a year. So it's an incredible gift that the IRS has given us, and you can use your own National Life Group product, the Secure Growth, to fund it. So it's an excellent thing there. Sometimes people question and ask you, like, look, what if I get sick, right? What if I get injured? Well, we know the story on the IUL side and the life insurance side with all the living benefits. You got the chronic illness rider, critical illness that can benefit the client. But with our index annuities, and if they take on the income, we give them an option to double their income for 5 years if they can't perform 2 activities of daily living. So if somebody's go back to the scenario, they're getting $34,000, multiply that by 2 for 5 years, and they get an additional income from National Life Group to pay for additional care, even from their annuities. So their living benefits are also on our annuities, not just on life insurance. It's a strong thing to highlight in case someone has that concern of, hey, what if I have to go to a care, right? Additional care. Or if I have to pay for care from someone, a loved one, a family member. Well, boom, you have it right here. You have an extra income for 5 years that doubles. And this is probably the best slide that I will share with you. Is really, what is your customer looking to do? When people ask me which annuity you recommend, I always ask 3 questions. How old are they? Their age. when do they want to use the money, the time that they have, and what is the amount? ATA. If you get those three things through your fact finding, getting to know the customer, getting to know what they want to do with this money, it boils down to those three things. And depending if they're looking for accumulation, right? They're younger, tend to be on the younger side. If they want income down the road, it drives you to the product, right? And it just goes down the list of what product National Life Group recommends that you use for your customer. Now, you got to look at it from this way, right? Like how I talked to you about the great solutions that we have, but how do you get in front of people, right? How do you get in front of a market that has this money saved up? Because it tends to be between ages of 50 and 60. So luckily for us, the government has made it to the point where everyone has a retirement account for the most part, right? There's a big segment in this world, in this country, who works for the private employer, right? Like National Life Group. I have a 401k here. Like I'll give you another example. Phil for many years worked at AIG, now known as Corebridge. Wait, sorry, this is recorded. I should be formal
Yeah,
here.
go for it. Go for it, buddy.
Just don't show your colleagues this over there. Just kidding.
And my colleagues, they don't own
You're
me. I'm free. I'm free.
well, you know what else was free is your retirement accounts that you had with them. So separation of service is a qualifying event. Phil was able to roll that money out of AIG, his 401k, and probably had a pension too. He was able to get that money out, even though he's nowhere near 59 and a half. He was able to get that money out. And so what I put Phil in the category of is a job changer, right? The person that goes from one company to another, that's a qualifying event. And so when you meet with people, ask them, hey, have you changed the job in the last 5-10 years? Have you had to change a job? What did you do with your retirement account back there with that other company? Oh, you changed your job multiple times? Well, what did you do with those retirement accounts? Right? That's one thing when you're meeting people or you're doing reviews with your current customers that you have on the life insurance side, just asking that question. Have you changed jobs in the last 10 years? What did you do with that account? I promise you, Phil didn't keep his account with AIG. I haven't even asked him this, but I wouldn't keep my account with National Life Group if I changed employers. I roll that probably part of into the market, probably a nice amount into an annuity, right? So that right there, the job changers. If you have a market with younger folks, right, and I mean younger folks who are in the ages of 40 or younger, their parents, right? Ask them, hey, you know, your parents, hey, look, Phil, you're 40 years old, man. Are your parents still with us? Yeah, they are. You know, they live about 30 minutes from me. But you know what? I hate my in-laws who live even closer than that. And so right there, if you do the math, Phil's parents and his in-laws have to be close to 60 at this point, if not over that age. So right there, well, have you helped them with their retirement planning? Like, what are they doing? Are they still working? Or if they're not working, how are they living in this retirement stage? Are you their retirement? I gotta know because because that's a whole different conversation. So what I've learned from agents is that if they work with people who are in their 30s and 40s and signing them up for life insurance, just asking that question, what are your parents or in-laws or grandparents doing for retirement, opens you up to that conversation. Well, Phil, I'd love after we get done with this life insurance policy, right? I'm going to come back and run you some quotes. We're going to put you through underwriting. But when I come back and get that receipt signed, I'd love to be able to reach out to your parents. Maybe we set up a lunch or something to talk to them about their options because the companies I represent have these products that are just specifically geared for folks either about to approach retirement or in retirement. And I'd love to talk to you more about that. That right there has opened up billions of dollars to go into annuities in this industry. So I know I'm just sitting on this chat message. So I want to look at it. How much extra to pay for the rider? Good question. So for this product right here on the income side, the income driver, you have two options. You can get the rider with the fee or without the fee. If you get it with the fee, it's 1%. Without the fee, it's 0%. This product here, the Zenith Income, it only has a 4 fee option, so it's 1%. 1% of the account balance every year. Now, you're probably asking too is about this income doubler. This comes with the income rider, whether you pay for the fee or you don't pay for the fee. Regardless, this is still available. So I want to make that clear. This is just a benefit, a feature of the income rider. It's available with the fee or without the fee. So, look at this. This is where we will be, guys. On Saturday, this is our building in Addison that we are on. If you guys are in the DFW Metroplex, I can't wait to see you next Saturday. We're going to be on this floor right here. And so I can't wait to see you guys. Just to wrap this all up and put a bow around this. This is the prime time for annuities. It really is. For the next 10 years, you need to be including annuities in your conversation. For the next 4 months, you need to be including the multi-year annuity into your conversation, because I don't know when the next time we're going to have this opportunity to offer these high interest rates guaranteed for 3 or 5 years and be able to offer you a bonus. Because I promise you, I don't know if we're going to have this bonus for next year. Because if the Fed lowers interest rates too much, that means that we have less money as a carrier to work with and to provide for extra commissions with this bonus, or the extra incentive to the customer through higher interest rates. So life insurance is there. It's Life Insurance Awareness Month, first of all. So this gives you an excuse to talk about it. But right now, it's a prime time opportunity to go through your customers and ask them about retirement. We are here to help you. My internal Blake couldn't make it, but he's here to help you. 3Mark has Bo, who is a phenomenal resource. Phil knows annuities as well as life insurance and real estate strategies that I didn't even know you talked about until the event at the Gaylord. So, guys, this is a phenomenal time to talk about these solutions and get it out, especially in our marketplace that has no idea about annuities. Phil, thank you for the time, my friend.
Yeah, I mean, that, like I said before, this is the great thing about the partnership is, people like Marco is taking time out of his day to help us understand, some of the things, and really some of the takeaways I had was, I never even thought about asking my friends' parents, because you're close. I'm 42, but from that standpoint, just having conversations about retirement. How often do you get into a conversation with, your friends, coworkers, and things like that, to the extent that, you're looking for an opportunity to, hear things, see things. I was actually on a call, I want to say yesterday, with the client, and the agent was like, "Oh, they have this much money. We should run annuities." And I said, "We shouldn't do anything until we feel out the conversation." And granted, he had a high number. He only wanted to start with a little number because he's like, "I just met you guys. I'm sorry, but." And so after the conversation, I was talking to the agent. I was like, this is why a lot of times your first interaction with clients is really more just a conversation. No other business out there do you really get paid to just strike up conversations with people. And I think that's the beauty of our industry is we solve problems that people don't know they have. But the only way they're going to find out they have those problems is if you actually tell them what you do. And so the big takeaways, honestly, I only thought you had 2 annuity products. So learning about the Zenith products and everything, that blew my mind. So do you have that last bunch of arrows in like a PDF, or like
Yeah,
can you
yeah.
send me the slide deck too? Because I'd love to get that out to everybody. and really just want to overemphasize the fact that I don't know any other carrier that does $100 a month as the minimum without having like $5,000 or $10,000. So when you talk about truly adding value to a client, when they say, I want to start an IRA, I want to start a Roth, even, you've got something to provide that value proposition. And then, like Marco mentioned, I told him to say it again, is we're all independent contractors, we're all entrepreneurs. If you have an S Corp, an LLC, sole proprietor, then you should really be talking about ways that you can even save on your own taxes. And so many people that we talk to, a lot of the focus of what Valor works with is small business owners. Well, you are a small business owner as well. So really you should be thinking about what you can put away on a tax deferred basis. You get your tax deductions now and help you diversify your assets for retirement. It's a great story. So, those of you who have agents part of your team too, uh, let me ask you, Marco, is there an easy way to figure out how to calculate a SEP amount through National Life Group?
Yeah, yeah. In the flyer, you'll see what the contribution percentage is. So once you see that, absolutely, and we can run proposals for you too. So if you have the business that may have 3, 4 employees, right? We can put something together for that. So
So you're telling us a free resource can provide quotes to help our clients, our agents here, make money and solve problems that their business owners didn't know they had.
bingo. That's
It's
it.
amazing. It's amazing. So, folks, I wanted to just kind of, role play through that a little bit, just to, again, to reemphasize, it's always nice to hear a non-monotone voice say it, but, when you overlap it with this gloriousness, the monotone magic, it just really overemphasizes everything. But wanted to also just make sure that I wanted to see if there were any questions that were that popped up. I don't see any. So, folks, if you want to see a replay of this, at Valor Financial is my YouTube channel. Got a ton of trainings on there, and this one will be loaded up probably tonight. And we're going to continue on with the trainings next month. You don't want to miss October. I'm just going to be completely honest. We have a TPA that I'm starting to partner with to start talking about additional vehicles like 401k plans too. And you can layer 401k with additional options too to help people maximize their retirement. So there's a lot coming, a lot of ways that you can serve your clients. Marco, thank you so much for the time. And I look forward to seeing you next week in Dallas for a wonderful micro TGC event. If you haven't gotten the opportunity to register yet, tgcconference.com, and just look at events and you'll see Dallas up there. Or if you're in the Atlanta area, I'll see you on Saturday. So everyone take care and have a great rest of the week. And we'll talk soon.
Thank you guys.
Bye.